Welcome to the channel. We're thrilled to have you here. Today we're diving into some of the biggest Wall Street calls that are making headlines, with a special focus on tech giants like Nvidia and Arm holdings, plus the latest upgrades, downgrades, and new stock initiations that could impact your investments. We'll break down what these analyst ratings really mean for your portfolio, and how you can leverage this information, especially if you're holding any of these stocks or considering adding them to your portfolio. If you want to stay on top of the latest stock market insights and trends, including detailed analysis on Nvidia, Arm, and other major players in the market, make sure to hit that subscribe button and turn on notifications. And if there's a specific stock you'd like us to analyze or a topic you want us to cover, just drop it in the comments below. We love hearing from you and value your input. First up, we're talking about Victoria's Secret, the lingerie giant. This iconic brand has been a household name for decades, known for its glamorous fashion shows and luxurious products. Barclays just upgraded VSCO to equal weight with a price target of $25, up from $23. This upgrade is a significant vote of confidence from one of the major players in the financial world. Now, a $2 increase might not seem like much, but it represents an 8.7% potential upside. For investors, this is a promising sign that the company is on the right track. Barclays is putting their faith in the new leadership at Victoria's Secret, and the brand's renewed focus on its core strengths. The new team has been working hard to revitalize the brand and reconnect with its audience. Remember, this is a company that was struggling not too long ago, facing criticism for its marketing and losing touch with its customer base. The brand had to navigate through a lot of negative press and declining sales, but it looks like Wall Street is starting to believe in the turnaround story. Investors are hopeful that the changes being made will lead to sustained growth and a stronger market position for Victoria's Secret in the future. Moving on to the healthcare sector, there's some exciting news to share. BTIG has upgraded GE Healthcare to a buy rating, signaling strong confidence in the company's future. They've set a $100 price target, which is quite significant. That's a bold call, implying a potential upside of over 30% from its current price, which is a substantial increase. So what's behind this bullish outlook? What makes BTIG so optimistic? BTIG believes that GE Healthcare will benefit from easier comparisons in the second half of 2024, which could boost its performance. In other words, they're expecting the company's performance to look even stronger compared to a potentially weaker period next year, making it a standout. This is definitely one to watch if you're interested in the healthcare space. Keep an eye on GE Healthcare, as it could be a game changer in the sector. Next, we're looking at VF Corp, the company behind brands like Vans, The North Face, and Timberland. Barclays has upgraded VFC to overweight with a new price target of $22. That's a significant jump from its current price, representing a potential upside of over 30%. Barclays sees value in VF Corp's portfolio of iconic brands and believes the stock's current risk-reward profile is attractive. This means they think the potential rewards outweigh the risks at this price point. Sirius XM, is satellite radio making a comeback? Now let's talk about Sirius XM, the satellite radio provider. Guggenheim has upgraded Siri to buy with a price target of $30, suggesting a potential upside of over 40%. That's a pretty significant vote of confidence. Guggenheim points to stable operating trends and improving subscriber numbers as key reasons for the upgrade. It seems like the company is managing to hold its own in a world increasingly dominated by streaming services. Extra space storage, banking on storage space. In the real estate sector, Jefferies has upgraded extra space storage to buy with a price target of $204. They're bullish on the self-storage industry as a whole and believe extra space storage is well positioned to benefit from continued growth in this space. The price target suggests a potential upside of around 15%, which might not be as eye-popping as some of the other upgrades, but it's still a solid return potential. Edwards Lifesciences downgraded despite growth. Now, it's not all upgrades today, we also have a few downgrades to discuss. Jefferies has downgraded Edwards Lifesciences to hold with a price target of $70, down from $85. This represents a potential downside of over 15%. While Jefferies acknowledges the company's leadership in the heart valve market, they're concerned about modest growth expectations going forward. Wolfe Research has downgraded ResMed to underperform with a $180 price target. This implies a potential downside of over 10%. The downgrade comes after a recent physician survey raised concerns about the company's sleep apnea devices. In the pharmaceutical industry, Truist has downgraded Incyte to hold with a $74 price target. This suggests a potential downside of around 5%. Incyte faces challenges from patent expirations and competitive oncology programs, which could impact its revenue and earnings in the coming years. BofA has downgraded Cencora, a healthcare distribution company, to neutral with a price target of $245. This implies a potential downside of around 5%. BofA cites normalizing industry growth and shifting competitive dynamics as reasons for the downgrade. Portland General Electric Limited upside potential. Barclays has downgraded Portland General Electric to equal weight with a price target of $49. This suggests a potential downside of around 5%. Barclays sees limited earnings revision potential for the utility company in the near term. Nvidia, the AI powerhouse, continues to impress. Now let's move on to the tech sector, where things are heating up with Nvidia. William Blair has initiated coverage with an outperform rating. They're incredibly bullish on Nvidia's position in the AI market, highlighting the company's impressive data center revenue growth. Nvidia's graphics processing units, or GPUs, are essential for AI applications, and demand is only growing as more industries adopt AI solutions. Arm riding the wave of the semiconductor boom. William Blair is also bullish on Arm, the chip design giant, initiating coverage with an outperform rating. They're impressed with Arm's strong royalty and licensing revenue model, which generates recurring revenue from the vast number of devices using Arm-based chips. With the semiconductor industry experiencing a surge in demand, Arm is well positioned to capitalize on this growth. Broadcom, another major player in the semiconductor industry, has also been initiated with an outperform rating by William Blair. They're focusing on the company's growth in AI revenue, driven by its strong portfolio of networking and storage solutions. As AI workloads become more demanding, Broadcom's chips are becoming increasingly critical for data centers and cloud providers. Needham has initiated coverage on Supermicro with a buy rating and a $600 price target. That's a massive target, implying a potential upside of over 100%. They see Supermicro as a major beneficiary of AI infrastructure investments. Finally, let's wrap things up with KKR, the global investment firm. HSBC has initiated coverage with a buy rating and a $148 price target, suggesting a potential upside of over 30%. HSBC believes KKR's earnings growth potential is undervalued by the market. So, there you have it, the latest from Wall Street's top analysts. Nvidia and Arm are definitely making waves, and it's crucial to keep track of these calls if you're investing in tech stocks. What are your thoughts on these upgrades and downgrades? Do you agree with the analysts' predictions? Let us know in the comments below. Thanks for watching. If you found this video helpful, don't forget to hit that subscribe button and ring the notification bell for more updates. We'll see you in the next video.